The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 20th. Terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, well, let those magical fingers do the walking. You can send me an email, steve@tfnn.com. And inside the subject heading, just please put radio show question, of course, inside the Tiger's Den. No need to do that because any ping will do. So let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow up 118 points, 24,730 is what she's trading at. The S&P up 3 points. That's trading out at 27.16. NASDAQ 100 up about 0.16%. That's trading up $10. Russell 2000 flat. Semis are up 7 points, about 0.5% to the upside. Spot volatility index down 16 pennies, only 0.84%. Gold's off 770. Someone is ringing the one-armed bandit. Silver off 17 pennies. Light sweet crude up $1.26. Lead the charge here dollar-wise to the upside. It is the amazing one. Amazon up $30. Arista Networks up 10. That's about 2% and 4% respectively. Arena Pharmaceuticals up nearly 32%, nearly $10. I don't know how to really pronounce that next one. We'll skip over to Adobe Systems up 3.7% or $8. The downside is Bluebird Bio. 15 buckaroonies, 7.7%. To the downside, Children's Place, PLCE. That's the ticker symbol, off 7% or nearly $10. Facebook down 9, 5%. Group 1 Automation down $6, nearly 9%. So certainly we have things to look at, but I want to look at what you want to look at, and I don't know what that is. So let's just simply start by taking a look at the markets. Where are we at? It's an inside day thus far across the board. If we take a look at the Dow as an example, you're going to see that it's trading out at 24,722. 24,719 happens to be the closing price at December 3rd. Well, what was it, the 29th? It was December 29th. 2017, the last trading session of calendar year 2017. So we're trading in essence at that level, but that's not what makes an inside day. What makes an inside day is we are trading inside of yesterday's candle. Now, what's the meaning of an inside day? Well, it can be a pause. That's certainly one meaning of it. That would be taking a look at a Japanese candlestick, a harami. But what an inside day really is a signal of a continuation of the trend that it previously came from. And at this stage here, if you take a look at the Dow, and the trend, short term, I'm not talking about the long-term trend out here. We'd have to put a longer-term time frame chart up on our screen. The recent trend is one that found a high on March the 12th at its descending trend line out there, and therefore that would suggest there's more room to run to the downside. That's what it looks like inside the Dow. We can take a look at any of the major indices out here, the SPX, the S&P 500. If you type in the right symbol, the actual chart data gets displayed on the screen. Amazing how that actually works out there. Again, here's a daily chart. You can see an inside day. We can try the the New York Stock Exchange. That would be NYA on Stevie's system out here. But across the board, you can see we have an inside day. So from this data, just knowing what an inside day candle session bar means, what we should conclude, until we can find otherwise, that the move to the downside is not over. Now, it could just be a test of yesterday's low, could be a test of the March 2nd level, could be a test in the case of the New York Stock Exchange, could be a test of the February 9th area out there. We don't know. We can also see that we do have 3 higher lows in place out here. So what can we really say about this market? Basically a sideways large range. There's no doubt it's a large range market out here. Not a free range, but a large range. New York Stock Exchange, 141 points the last 10 trading sessions from high to low. If we take a look at the S&P, 35 points. Can you believe that? If you talk, if this, I'll get it out, don't worry. Trader's paradise, 35-point average daily move just of the last 10 trading sessions inside the S&P 500. Yeah, how about that? So that's kind of the new normal out here. Yesterday's nearly 400-point move to the downside was nothing more than normal. It was 3, I don't remember what it ended at, 3-something. But the average range of yesterday's bar was about 450 points inside the cash indice out there. You know what we should do? So inside bar suggests moving to the downside should continue. If we take a look, since we're talking about the S&P 500, let's continue talking about it. Let's go take a look what the market breadth tool suggests to you and I. And we can see that yesterday was a clear cross of the number of individual stocks in the S&P 500 trading below the bottom of their daily box. Right now that number is 135 versus the number of stocks trading above the top. Trade above the top, you're above resistance. Trade below the bottom, you're below support. Just the easy peasy way of being able to interpret it. And when you see these crossovers, it tells you what the market breadth. So when you have negative market breadth, anything that upsets the monkey cart says price can go swooshing to the downside, likewise to the upside. By the way, there's 135, if I didn't say it, 135 issues to the downside, 96 to the upside. Now, there are 270 issues trading in between those boxes, and those are, for the most part, we'll just simply call them neutral. It all depends on the previous box, where price is trading, things along those lines. That is why I go ahead and I leave that line off the chart, just so we can take a look at the simple meaning. Sometimes it is a KISS method. They keep it simple, Steve method, that just simply works out best. Now, we don't have that type of a crossover on the weekly time frame chart out here. We can see that, in essence, we have seen a couple of crossovers on a weekly, and that typically occurs when you're in a consolidation mode, albeit large, right? 400 points inside the Dow, 35 points inside the S&P 500. This is when you want to sharpen up your trading skills, getting in and getting out, because there is no trend that has been established. Yeah. Now, longer term, of course, the trend is to the upside. The Dow's going to head up to 30,740. That's just the first target, but it can't do that until it gets out of its own way. And its own way says it needs to close above and trade above the close on December 29th, 2017. Be right back. You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability, and last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So one of our traders in the den, John in Philly, speculates that the ES Mini is going to target the 2668 level out there. And one of the things that I like to do for subscribers is, in fact, this coming Thursday, I will have a new workshop available on their members page out there. You know, like this is all about education and learning and being able to speculate where it is that we believe price is going to and reasons why out here. And we'll spend a little bit of time taking a look at at least the top 5 issues inside the NDX 100, which represent 43% of the weighting inside there, and try to figure out and speculate where those may be headed to as well. But in the case of the S&P 500, if we take a look at what occurred yesterday, and the workshop that's going to be on members' pages, or page, I should say, coming Thursday morning is going to be the workshop that I've done on horizontal trading range boundary lines. Those are the primary trading ranges that were really originally taught by Bud Rolfs out there. Fortunately, I was able to automate the tool because it was such a lot of work. You can't beat that, grammar. But it was so much work to do it manually. It was just easier to really understand what the requirements were in order to create those primary or horizontal trade. Now, those are referring to just as I said, horizontal. So it makes it a little bit easier than just calling primary. And that's the sideways, the resistance and the support levels. Now, on my chart out here, and this is different than the way that Bud teaches it, and because I can automate it, I've got a daily, a weekly, and a monthly set of tools out here. And the reason why those are different, sometimes they're the same, not too often, but sometimes they're around the same area, is because what we're using either opens or closes. I like to use the word co-located. Opens or closes out there. And what we're trying to identify is the largest number. And once you identify the first set of largest numbers, you look for the second, you look for the third, and you figure out what the logical equidistant range is, because once you have that, you're just simply adding those levels to your primary set of pivot points, right? Ooh, that is just a lot of information. Hopefully that was well explained. But let's talk about what occurred yesterday inside of the S&P 500. Price came down, find support at its daily horizontal trading ranges. Now, we've seen closes at this level, that level being 27. It says on my screen, 27.0587. Are we really right to the penny out here? No, we're not. We have just a little bit of tolerance inside there. But we do know that at 27.06 is what we'll call it. That is a fairly solid, or has been a fairly solid level of either support or resistance. Thus far, support. Now, the daily would say if you see it close below 27.06, then it opens up the door for either the prior swing point inside the S&P 500, that's that March 2nd level that we talked about, or could get all the way down to the bottom. You're going to see some little dash lines. I'm looking at the solid lines as being the key levels out here. The solid line would then say, hey, you can get all the way down to 25.47 out there. Not saying that's where it's going. Just saying this is how you would use this set of tools. Now, if you take a look at the weekly chart for the S&P 500, you will see that it also has a 27.05 level. Now, we've only seen one close on a weekly basis at that area. So here, this happens to be a coincidence. If you do believe in coincidences out there, where this 27.05 is a pretty key area, or could be a key area of support. So I just throw that out there for something to think about. Now, it's the monthly chart here that shows we're really in this range, fairly wide range, right? Between the 26.30. Now, I say right. You can say, what do you mean right? Well, when I say wide range, just take a look at our average true range in the S&P, 35 points. That's a pretty good, large trading range out there. So between 26.30 and 28.50 is the range that price is stuck inside. And not until we see a clear break on either side of that will we really then see a trend begin again. Okay, so let's go take a look at what's going on inside of the top 5 equities inside of the NDX 100. Because quite frankly, until the NDX 100 gets its mojo back, it could be some tough sledding. If we take a look at Apple, as of yesterday's close, Apple represented 11.3% of the NDX 100. It's trading right now at 119.11. Is that the correct price? No, couldn't be the correct price. Where'd that come from? I had my cursor in the wrong spot. It's trading out at 175.21. And 175.19, just 2 pennies above that, happens to be, I even thought I was going to say heavens to Betsy. Where does heavens to Betsy come from? Have we ever figured that one out, gang? That is 2 cents above the bottom of its daily box. Now, that's a strong support area. Only you could know that it's a strong support area. And the reason it's a strong support area is just simply because of the structure of its box out here. And you might say, you were just first put it in, you say, what are you talking about? The structure of its box. Well, if we take a look at this set of profiles out here, the profiles help us to identify logical, not just logical, but areas of price support and resistance. The top resistance, 181.65. The bottom support, 175.19. If we just left it there, that's all we would know. But you and I don't do that. We say, give us that center line. Where is that in relation to either the top or the bottom? Whichever one you're closest to gives you the structure. In this case here, bullish structure, because 176.12 is the bottom of its box. So what you know, both from a bullish standpoint and a bear. So let's say you're a bear of the NDX 100, and you know that Apple represents 11%, and you want to see this thing continue to get its mojo to the downside. You need to see a close below the bottom of that bullish structured box. Nothing more bearish than a failed bullish message. Yeah, and volume-wise, if you take a look at yesterday inside of Apple, it was about 33 million shares, in essence going against 38 million shares. Aha! A light volume pullback inside of the Apple cart. Now, on a weekly basis, it too has a relatively new box, one that's been around for about 4 weeks. So I guess, I don't know, do we call that relatively new? Let's just call it relatively bearish. And we're going to call it relatively bearish because, see, its structure, the exact opposite of the daily. Now, the key level to be watching here, and we can see that price found support at a logical area. When we take a look at the daily chart, if you get a close below the bottom of its box out there, price then should head back to 171.14. And if it doesn't find support there, I'm just pounding the desk out here, then this bearish structured box should send Apple down to 156.21. That's what a real bear would be looking for. Now, what the real bear doesn't want to see is for price to close above 177.11. Again, nothing more bullish than a failed bearish pattern out there. So the key level to be watching inside of Apple, without a doubt, it's not the low of yesterday. It's the bottom of its TAS market profile. And that level, again, 175.19. At this stage of the game, you got to call it either neutral to bullish, which is really something to think about. If we take a look at the amazing one, that would be Amazon. That is the second weighting inside of the NDX 100. Its weighting is 9.5%. It's trading above the top of its daily, the top of its weekly, the top of its monthly. Amazon is headed back to its highs to at least test it. That's the session of March 13th. 6.5 million shares up there. You've already done 3 million shares for the day. Not too bad, but it is the amazing one. Headed back to its highs, 1578 to 1617. We'll be right back. We'll take a look at the other three: Facebook, Microsoft, and Google.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we're spending some time just taking a look at the weighting, 43% of the weighting inside the NASDAQ 100. Only 5 stocks. Really, technically, it's 6 stocks because you've got both shares of Google. And I think I mentioned, accidentally so, that Facebook, did I say it was 9%? of the NDX 100. That's not true. I was misreading. It's 5.27%. Microsoft is 9%. So you've got Google at 11, Amazon at 9.5. You've got Microsoft at 9. If you add up the 2 series for Google, you're at 9 point something. And then you've got Facebook, which is 5% out there as well. So just take a look at those five. Now, we already know Facebook is kind of falling apart from a stock standpoint. And if we take a look at the trading session of today, what you now have is a confirmed A to B equals CD to the downside. First, it's there's a hammer candle inside of Facebook. That hammer candle out here, where do we see that hammer candle? The trading session is on February the 9th, right? And we're going to use that as actually our swing point. So, you know, when you close below the low of a hammer candle, you always say that nice rhyme. If you're long, I'll get it out. If you're long, you're wrong. Well, what does that actually mean? Well, what it means is that price should continue heading lower. In the case of Facebook, and the reason why I say it is a confirmed A to B equals CD, it just because it's confirmed doesn't mean you report to duty, although you should, because it's taking out the February 9th level with volume. That was 39 million shares on February 9th. Today's volume is already 90 million shares, so that's confirmed. Now, the one-to-one, uno to uno, gets you down into the 157.96 level out there. That may be all she wrote. By the way, that would be a Gartley buy pattern, or could be a Gartley buy pattern forming in the case of Facebook. So should we be looking at potentially being buyers of Facebook? Yeah, we probably should out here. It's just making, it's a gift. You got to consider that everything in life happens for you, not to you. Right now, it's happening maybe to you. You'd say if you bought it up at the top of 195.32. I get how you might think that. But at this stage here, let's talk about where do you buy Facebook. I am not saying 157.96. I'm saying we're going to look at that level just so we would 150.31, just so we would 140.57. All those are valid price objectives to the downside that each of those levels or any of those levels would form a Gartley buy. Now, if we take a look at the weekly set of profiles out here, the bottom is 150.57. The top is 158.88. Very close to the 157.96 of the one-to-one A to B equals CD to the downside. The problem here, and this is why you're going to have to really find some kind of bottom, know your Japanese candlesticks, your cuts of beef out there, because in the case of the monthly chart, well, this thing is now trading below the bottom of its monthly profile, which was a bullish structured box out here. You can't step in front of this equity. Well, and of course, you can do whatever you want, but you take it is the way that it's meant. You really shouldn't step in front of this equity until you see some type of bullish reversal signal at the completion of some type of pattern. Whether it's the lightning bolt or it's some other pattern out there, that's what you'd be looking for. So you've got Apple that is neutral to bullish, Amazon, which is bullish, meaning it's moving higher, Facebook definitely bearish. Let's go take a look at Microsoft out here, MSFT. Because when we take a look at Microsoft right now, it's traded, or it has traded, yesterday down to the bottom of its box out here. Now that box is a little bit of more of a bearish, I'd say, structure to it slightly. But support was at 92.14. Yesterday's low, the exact low, was 92.11. The close was 92.89 out here. And just like, which one was it? Was it Apple? I think it was Apple. So very similar to Apple in that it does have a weekly, the week's not over, it is only thirsty Tuesday. Usually it's thirsty Thursday, but I'm a little bit thirsty on Tuesday. And it has traded right back to, in essence, just slightly below the top of its bear structured weekly profile, which has been support out here for the last 3 out of 4 weeks. So the level to be watching, it's going to be 93.62 at the top of its box. You close inside there, you probably have 91.17. There's not a thing you can find on the monthly chart for Microsoft that says that it's bearish. Nada, zip, zilch, zero, nothing. So long term, still looks pretty good, even though it's done a 1 to 1.618 A to B equals CD to the upside. It's got higher to run. But it's not going to do that until you really see it close above 95.33. What we can't say, what we won't say with regard to the Microsoft chart is somehow that this thing is bearish and it's headed downtown. It got downtown yesterday at 92.14. Well, let's go ahead and finish this up and take a look at the googly one out here. We're just going to take a look at GOOG out here. And this stock, slightly more bearish when I just take an initial look at it. And that initial look says, you know, yesterday that was an island top that had created out there, just like the NDX has an island top. And that's a reason to be a little bit concerned. Price probably is headed to 1073.90. Now, 1073.90, it's inside its daily box that formed 4 or 5 days ago. It's a bullish structured box. It would be a higher low if, in fact, that level held. So 1073.90 would be the number. There's no A to B equals CD to the downside or anything like that inside of Google. It needs to, on a weekly basis, close above 1093.99. But you see, as we take a look at the NDX 100 right now, it is not overly bearish, other than Facebook. Doesn't mean some of these stocks aren't going to move lower. So if we go take a look at the weekly chart, I don't know, where are we on the weekly cross? The weekly cross, still bullish, 44 stocks above the top, 25 below the bottom. I think what you should be here is a bottom fisherman or fisherwoman out there. And that's just take a look at 43 or 44% of the holdings inside of the NDX 100, kind of like I did yesterday and take a look at the Dow. When you actually took at the individual stocks, the top 10 or 15 represented like 60, 70% of the Dow out there. They were actually pulling back on light volume. Okay, let's go to our first question. It might not have been our first question. Let's go to our first question, which was something about the U.S. dollar index, I thought. Who wrote about the U.S. dollar index? Did somebody write about the U.S. dollar index, or was it the yen? The dollar index, Steve. There it is, right in front of me. Danny. Gold appears to be correlated to the dollar now, not the yen. Yes, absolutely right. So here, let's go take a look at that. Let's go look at that. Let's not just say yes, absolutely right. I do agree that gold is not correlated to the yen any longer. So that correlation, although I haven't looked at it for the last probably month, that correlation, I believe, broke a while ago. And so, yeah, I'm on board with that. With regard to, but we can go make that assessment in a more objective way. It's always a little bit better to do it objectively. And the way we would do that is we would take a look at Steve's correlation tool. Some of you on your trading systems may have this same tool out there where you can take a look at correlation between two things out here. So this is going to be easy, easy peasy, I believe. Let me see and make sure I do this right here. So GC, let me do the continuous contract out here. I'll see if I can put the current contract up while we're at break and make sure I've got enough data out there. And we're going to take a look to see what kind of correlation we have between the gold contract and the U.S. dollar index. And we're going to do it what we're going to call objectively. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up about 80 points, give or take. And so the chart that you're looking at on the top of my screen, just to explain it, is the chart for the gold contract. I do need to keep this on a continuous contract in order to get enough data in here to go ahead and take a look at the correlation. Now, the bottom portion of my chart right now, this is showing you the correlation between the gold contract and the euro. It's also the Euro futures contract is what I have up on my screen. Now, the bottom panel, you're going to see bars. And you're going to see bars, in essence, either to the upside or the downside. The upside bar, there's a zero line out there. You don't really see it that well, but it's out there. A bar to the upside says that it's correlated, meaning that if gold is moving higher, meaning gold and the instrument, in this case here, the euro, are moving in the same direction. Uncorrelated, you've got the opposite. They're moving in opposite directions. Doesn't tell us which one's moving and, which one's higher, which one's lower, just that they are uncorrelated. So that's the meaning. Now, this is take a look at, in essence, at a 5-day average period. I can take and change that to a 10-day period. I can take that and change, I can change it to anything I want. There's a 20-day period out here. So that's in taking a look at the euro. If we go take a look at the yen as an example, so now it's the yen in there, and it's for a 20-day period. This says that it has become uncorrelated, in essence, over the past 2, 3, 4, 5 weeks out there, just as Danny in Atlanta was pointing out. Of course, that's just using the 20-day period out there. And then if we take a look at the U.S. dollar index itself, here we're going to see the same 20-day time period, so we're kind of averaging things in here. Here you're going to see that it is almost completely uncorrelated. Now, that's in essence what Danny was saying when he said gold appears to be correlated to the dollar now, meaning that I believe that they were operating in inverse, which is typically the way you want to see it. You'd say a weak dollar means you have gold moving to the upside out there. So completely accurate statements to say what you said out there, certainly supported by the data. But now it becomes the question, well, how do we use that to really trade? You just kind of put that in the back of your head for the moment, or the front of your head, or wherever it is you want to put it. And we go take a look at what I think is even more important, which is, hey, what's gold doing? You know what you'd love to see out here? You'd really love to see gold close below 1305.20. That's priced in dollars. And you'd really like to see gold not close below 1064.20 in euros. That would be the type of bullish divergence that you'd really like to see. Now, I think that is a real possibility out here. You've got gold trading at 1311. Why is that a real possibility? Because Stevie says so. No, it's because what we have right now inside of Goldilocks is a falling price oscillator, bottom panel below zero. You'll see the reading is minus 1.45. And in essence, 4 days ago and 5 days ago and 6 days ago, those were the tests of Stevie's red line while that price oscillator was getting to or down at the zero level. So we've had successful tests and rejections that suggest lower price. Well, you simply have a nice descending price channel that gold has been trading in. You certainly have an A to B equals CD to the downside possible. Not there yet because it hasn't moved below the B point. That's at 1303.60. 1303.60 in essence can be a level of support too. But ideally, Danny, and I'm only speaking to you, it's just you and I having this conversation. What we'd like to see, just you and I, is for gold to close below that swing point, and everybody would be saying, and that could be including me too, that now you've got a confirmed A to B equals CD to the downside in gold. And I won't be on board with that unless we see gold priced in euros do the same thing. Instead, what we want to see is a bullish divergence. Now, that doesn't mean we're out of the woods if that's going to happen, because gold is not out of any type of woods until it closes above 1107.70. And that is priced in euros out there. So this chart here, probably the key chart, Danny, more key than taking a look at whether gold is correlated to dollars, U.S. dollars, or yen, or the euro, or anything else that we have out there. Now, I could be all wrong, but I believe that this is the chart that is muy importante. Even more important at this stage of the game than the actual TAS market profiles, which they say that there is support inside of gold right around the, where is it? Right around the 13.15.40, and you're trading at 13.40.50. And 13.90, 13.19.60, that's the top, or that's the bottom of the weekly box. So at this stage here, you're below levels of support. So I'm holding out that in fact is what we're looking at out there. Okay, hopefully that answers that question out there. Let's take a look at. Oh, we've got a request out here. Did the ES Mini show new TAS profiles on the daily or the 240-minute chart? Well, let's go answer that question by taking a look at that chart out here. And we will see that there was one in the 240, and that was formed earlier this morning, but not so in the daily. Now, in the case of the 240-minute chart, it does have a bullish structure. That says that 2703.75 could be or should be a level of support out there. If it does that, then you have a slightly higher low out here. And that would say then that price could run to 27.42. The daily chart, unfortunately, for the ES Mini, it is a stubborn one. It is very stubborn. It's not providing us with a lot of information out here. It's just trading below the bottom of its daily box. So that's why we've got to go back and take a look at market breadth just to try to figure out what is it doing. There's the weekly, slightly bullish. There's a daily, slightly bearish because of yesterday's crossover. And there's the 240. The 240 has been bearish since March 16th at about 4 p.m. going into the close. Today is the 20th. So the 240 out here, when you take a look at profiles, says it's not overly abundantly clear that it wants to. Price wants to make it up to 27.42, but we got to use these things in conjunction with each other. Price moving down and testing a bullish level of support in the actual price profile of the time frame that you're trading is going to be the leading indicator, because it will take a while for the lagging indicator, that's the market breadth, and it is a lagging indicator out there, to go ahead and switch over. Or slightly, we'll call it slightly lagging. You know, if you use that on a short-term chart, here is the short-term chart out here, and that means this thing is switching all the time. And this is taking a look at 30-minute sets of profiles out here. This thing switched to bearish back at, was it 110 as we were coming on the air? 110 this afternoon. It's still got a negative breadth meter there, 19%. And this thing switches back and forth all the time. Very helpful for the ES trading out there on a shorter term basis. So hopefully that answers your question there inside the Tiger's Den. We'll get back from this break. We'll go see if anyone has let their fingers do the walking. I'm looking right now. It looks like the fingers are on strike. Maybe that's a good thing. I don't want you to give me the finger. Steve Rhodes with TFNN.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. As we do the 2-minute run out here, let's take a look at Delta Airlines. And if you take a look at Delta Airlines, when it was making the bottom back on February 10th, it was really the very next day when it gave you that buy signal. That was February the 13th. Now, you might say, what are you talking about, Willis? And that's just simply as price was making its high out here, making a nice little, oh, God, what are you doing here? What are you doing? What the heck? Why? Oh, don't do this to me. Oh, my gosh. That's weird. Let me see if I can do this. If not, I'll do it another way. Here we go. So I'm just going to put in the A to B equals CD, the lightning bolt pattern, to the downside. We can see that it made a 1 to 1.272 A to B equals CD to downside. On February 10th, we didn't know if that was a bottom. But on February 13th, on that Monday, when the cavalry came in, it had a nice little bull sash candle out there. Since then, we've seen price move to the upside. Price moved to the upside inside Delta Airlines. Well, it's kind of stalled a bit right here where this thing had gapped down. That was the trading day of January 25th. So that is a resistance level. It's not that it's just overly bearish. But it could be forming a Gartley sell pattern out here. And when I say could be, here's your A to B equals CD to the upside now. And you can see, whoops, that would get you up inside that gap out there at about the 58.30 level. That would also, if that were to occur, could get you to the 7th wave move, letter G, on my system out here. So it's not overly bearish, hasn't really to a certain extent completed that pattern because it still has a price oscillator above 0. If it closed below Stevie's red line, I'd give you a different checkup on this, but it is up against resistance out here. So Delta Airlines, more of a neutral call as we speak right now until it gives you and I more information, and that was for SAT. There was a question if we could take a look at Netflix out here, NFLX. We're going to do that here in the next about 8 seconds. Here's what we know about Netflix out here. It's got support at 308.77. Kind of all these stocks doing what they should have done with regard to the decline yesterday, and that's come down to test the level of support, 308.77. If it closes below that, well, then we'll have to figure out where it's going, but we can't do that today. My apology. Thanks so much for being here. Stay tuned. Your favorite polar bear mine, he's up next. Tom O'Brien, 3 to 5. Andy Heck, 5 to 6. I'll be back with you tomorrow, 1 o'clock. Thanks for being here.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.